Okay, we're live. So,
Right.
welcome everyone to another episode of Crypto uh, Coffee Time with Crypto. We had a lot of technical difficulties today, so welcome for joining us. I'm Mr. BTCVC, and I'm here again with my friend Degen Ben Ben. Uh, thank you all for all your feedback and questions from last episode. This time we thought we would start off by just going through some of the questions you guys had for us.
All right. So I guess I'll take it on from here. I'll be the one asking and you'll be the one answering, okay?
Go for it.
All right. So I guess this one I really personally want to know as well. So how do you find and choose different crypto projects, and what are the criteria as you go by? So I'm guessing we want to start with the most important criteria first.
So that's an interesting question. I think for me, I like to look at the more popular ones first. So when I first got into crypto, I would look at the top 10 list on CoinMarketCap or CoinGecko. These are two good websites that track the like basically all the crypto projects that are out there. Uh, so that's always a good place to start. And I think once you get used to playing around with those large cap projects, then you can kind of venture out into the smaller plays. To find the kind of smaller cap projects, I like to look at a website called DeFi Llama. So let me see. Maybe I can bring that up. So this DeFi Llama website, it's good because you can go by chain. So that should be coming up. So this is DeFi Llama. You can on the menu here, you can kind of choose the chain, and once you find the chain that you want, for example, like if you click into Ethereum, you can, well, actually, if we kind of go back to their homepage and click Ethereum, you can kind of see all the top projects that are on Ethereum. So you can, I would again start with the top 10, and when you click into it, each one of these, it'll give you a good like a quick description of what they are. It'll link you to the website. So that's always like a good place to do research. There are other ways, but generally I think that's like a pretty good start.
Pretty good start, but so I feel the person that's asking this question. So once you're in DeFi Llama, let's say, so most of the smaller cap projects are like with the lack of a better term, like sketchy. Like how would you go around trying to like filter the really bad ones out? What are some, like one or two that are really important when you look at those smaller cap plays?
Yeah, okay, so the first thing I look for is whether the project has been audited. I
Mm,
personally basically won't. So I
okay.
first look at market cap first, because like a larger, like a project that has already uh, captured a lot of TVL, which is total value locked. Uh,
Mhm.
let's say it already has like $1 billion in there. It was already a big target for any kind of hacker that
Mm,
any if somebody were to rug pull or to hack it, it, and it was a very obvious way to do it, then it probably would have happened already. So that's kind of like the first thing.
mm,
Then I would look at the audits. I would also try to see if the team is doxed. So basically, if they are known, kind of like what you mentioned in last time's
mm.
video.
Yeah.
Other things are whether they have a bug bounty. Now, a bug bounty is basically an amount of money that the project kind of puts onto a website like ImmuneFi, and they tell white hat hackers that if they can find. Do you see this crazy
Whoa,
thing
there's
going
something
on
like
with your
that?
screen?
Oh,
Do you,
I don't see it on
oh, you
the
can't
Skype
see
page, but
yourself.
no,
There's
but
something
it's okay
weird
because
going
I
on with
did
your.
not know what bug bounty is. Is there a site for this?
Yeah, so the site is called ImmuneFi. I can.
Immune-
Let's bring the viewers back. So actually, this is also a pretty good way to find projects, because if a project is listed on here, you can see that they offer like a reward. So once you click into it, it'll tell you like for a critical hack, the
gosh.
payout could be up to $10 million. So that any hacker basically is more likely to go and claim the reward than they are to actually hack the project.
Is this even legal? How?
Just one second. I gotta see if your stream, there's actually a problem with it.
Oh, okay. Oh my god. So.
Oh.
Oh my.
Okay, so okay, so my wife just confirmed that your video is very scrambly, so
Scrambly? Okay.
that could be a technical issue. Oh, there you go. You did something to fix it.
No,
So
I didn't do anything.
okay, well, it's fixed. So
But it's
there we
good.
go. Sorry about
Oh
that.
my. So back to the topic, right?
Right. So the bug bounty is a good thing to check for, because essentially when you are talking about smart these projects risks, you have the risk of a rug pull, which is the team or
Itself.
someone pulling out the liquidity. So basically, it's a scam project. And then you can have a problem with the code of the smart contracts, and so that would be like the smart contract platform itself. So that's why projects, it's very important for them to pick a platform such as Ethereum, where the smart contracts itself has stood the test of time, and is seen as more secure. Then you have the protocol itself. So the protocol, there could be a vulnerability in the protocol's code, and that's where the bug bounty comes in. Those are,
Interesting.
and then I would also check I'd go onto the project's Telegram, I'd go on their Discord just to see what other people are, talking about. A lot of
Okay.
times, a lot of times you get a lot of red flags just by going on to their Telegram chat. So if you see the admins of those projects, first of all, you make sure it's the official channel. But if you are at the official channel and the team or the admins there are really kind of shilling the project or pumping it, then that's probably something to avoid. If it's a good legitimate project, the teams are usually more focused on kind of building up the community or
Okay.
talking about developments, those kind of things.
Okay. Got it. Got it. All right. So here comes the second question, which you might have to elaborate on it a bit. So it is, how do you compare the L1s out there, since there are so many of them? So you
Okay,
might have
so
to explain what L1s are.
yeah, that's a good question. We'll go back to DeFi Llama here. Okay, so L1 stands for a layer one blockchain, and layer one blockchains are also known as the security layer. So Ethereum, Bitcoin are both layer ones, and you also have other layer ones like Avalanche and Solana. The layer one is the, I guess, the base blockchain. And why we differentiate layer one is because there's layer twos, which are typically used to scale the transaction capacity of the layer one.
Okay, so like so I'm gonna say give out an example to see if I even understand that. So
Yeah.
for example, we have Avalanche, and the native token is AVAX, right? And that would be the layer one token.
Yeah, so because Avalanche has its own consensus mechanism, it has its own validators, so it's a proof of stake blockchain, and so because it has its own validators, it would be its own. It's not actually a blockchain per se. Like Avalanche is, they use something like called a DAG, directed acyclic graph. Okay, so it's not the same as a blockchain like Bitcoin, where it's a proof of work, where you have one block after another, and it's like a linear kind of thing.
Okay. And then within AVAX, let's say the Trader Joe coin, that would be layer two.
No, okay, so on a blockchain, especially if it has smart contract functionality, like Ethereum, any developer can build an application. So a decentralized application, which is called a dApp, and that would be something like an exchange, a decentralized exchange, or other. There are a lot of exchanges, but basically any kind of application that you can think of to build on a blockchain, that would be considered a protocol. So you can have like a DeFi lending platform that's like Aave would be a protocol,
and that would be a layer two. Like
no, it's not a layer
the
two.
dApp itself.
It's just a dApp that's built on the layer one or layer two. So, for example, Ethereum, the layer one, often, at least it used to have really expensive transaction fees, and that's because of the congestion. A lot of people want to use that layer one, and so for for some people who can't afford to pay the high transaction fees, they can trade off sometimes it's trading off the security. Sometimes there is some trade-off when you go to the layer two, but it's generally you get an order of magnitude less in transaction fees.
So what would be considered a layer two? Like
So Ethereum has a few layer twos. Something like I don't know if you've heard of Arbitrum or Optimism. So going back to, let me see if I can bring this up. We go back to their homepage. I just realized that we'll go to the chain. Sorry. So when we clicked into Ethereum, you see how it populated this sublist. All of these are their layer twos.
oh, okay. So at least we can take a look at them. Okay.
Yeah. So there are layer twos that are also kind of layer one / layer twos. So something like so you've heard of Polygon. That's layer one in the sense that it has its own validators.
Chain. Oh, okay.
So it has its own validators, so it has its own consensus mechanism, but it's also like it checkpoints to Ethereum. So it basically you have the option of securing that transaction on Ethereum if needed.
So
So then it is also kind of
a layer
quasi
one,
layer two for
layer
Ethereum.
two. Okay, so back to the original questions, like how would you compare? And I'm guessing when they say compare is which one do you sort of see intrinsic value in? Like, I guess while you're doing your research, when you're comparing them.
Wait, sorry. Can you rephrase that?
Yeah. So the original question was how do you compare the L1s, right? So
Yeah.
and to my in interpreting it, it's just that which one do you choose to have a better potential? I'm guessing when you purchase them or get into them. Like how do you choose?
So when you dive into the different blockchains, you realize that okay, so some of them are very different, right? So it's like Bitcoin and Ethereum. Ethereum just has a smart contract functionality, whereas Bitcoin originally, had nothing. Like there was a recent upgrade to Bitcoin called Taproot, and it's supposed to be touted as potentially giving Bitcoin, the ability to have smart contract functionality, but it's not really at the
Mhm.
same kind of level as what Ethereum is, because Ethereum is
Okay.
really aiming to be this world computer kind of
Okay.
blockchain. So the other L1s are like, okay, what are the alternatives to Ethereum? And they all came about because Ethereum was too slow. So once it got
Yeah.
congested, it became too expensive, too slow. So we look at these other L1s, and they usually will tell you uh, how fast they are. So, but how
Yeah.
fast a blockchain is, there are lots of ways to measure how fast the blockchain is. So, for
Hmm.
example, just because a blockchain can process a lot of transactions per second doesn't always necessarily mean that for the user experience it is the fastest. Okay, so you also have like time to finality, which
Yeah.
is like a really important metric. So something like Avalanche has a really fast time to finality, and I
Hmm.
really like that about Avalanche.
Hmm. So time to finality, from my understanding, and maybe if you can correct it, is just how long it takes for like maybe a validator to say, hey, this transaction's good, like approve.
Exactly, for it to be
Okay.
confirmed.
Cool. So, yeah, that was kind of like an open question too, but I guess we'll move on. Some of these questions, there's more details to it, and we'll leave that to maybe another day when we have like maybe specialize into them.
Yeah, like,
Um,
comparing L1s is like a really, really broad question just
yeah,
because there are so many
yeah.
L1s. And like, just really briefly, like, for example, a blockchain like Solana has like really fast transactions per second. So it can handle um, a central order book exchange, which this really sets them apart. Then you have um, like other L1s like Terra, which have really unique designs with like a stable coin and
Hmm.
like a whole ecosystem for the stable coin. Um, so that's what, like, a lot of these with L1s, you're looking to see kind of what sets them apart. And usually the newer ones have the best tech. No, it's hard to say which has the best technology, but some of the really new blockchains do seem to have like the better technology. But
Like at least a more innovative type of
yeah, but it
technology.
doesn't necessarily mean they have the best adoption. So at the end of the
Okay.
day, it's really about what you can do on the blockchain. So you can go to
Mm,
DeFi Llama, go and check out what kind of projects are on there,
mm,
and for me, I want to look for a balance between how good the experience is using
yeah.
the blockchain as well as what I can do on the blockchain.
Okay. So there we go. DeFi Llama is the place to go. And
We're not affiliated
here
with them, by
comes.
the way.
Okay, so here's the next question. So this is a really important question. So they say Bitcoin is basically digital gold, right? And we have a viewer. So why doesn't its price behave like it?
Okay, so we talked about this last time. I mentioned that it was digital gold, and I
Yeah,
think like one of my our friends mentioned. Okay, so um, why doesn't it behave like gold, especially with a lot of the geopolitical events
yeah,
happening as we speak, right?
yeah,
You see gold spiking up in value,
yeah,
um, and Bitcoin, well, the whole crypto market today seems to be
yeah.
um, down, and so is Bitcoin, although not as much as some of these other projects. So unfortunately, my answer is going to be a little bit abstract because you have to understand, you have to break up the value of Bitcoin into components, right? So there's like a component of Bitcoin that will behave like a store of value, and then there is a component of it that will behave like a risk asset because it is not, because actually if you look at Bitcoin, it's not a store of value yet. It is a developing store of
Mhm.
value. So when we talked about it being an experiment last week, last episode, and so at the end of the experiment, once it attains store of value, for me that would be the end of the experiment, but for other people they're looking at something else. But let's say within 10 years it it becomes stable, with volatility similar to gold, and it's had over 20 years of price history. I think the store of value component will be a lot greater, than what it is right
Mhm.
now, and the risk premium, the component that it trades as a risk asset will also be smaller. So right now, I would say, especially when if Bitcoin was at $69,000, the risk component probably was, you know, predominantly so. So that's so then you'd consider it potentially overvalued. But how how much of Bitcoin's price is actually, you like a store of value, intrinsic value at the moment,
Mhm.
nobody really knows, right? At the end of the day,
Mm.
what it's worth is what someone is willing to pay for it. So for me, I run my own models, and you just have to have conviction. If you believe in it,
Yeah.
then hopefully that thesis will play out.
Okay. All right. So I just want to mention something because some of these questions, like, they seem to be very like tutorial based. So it's like, oh, how do you buy crypto? What's a wallet and everything? I guess something that could be covered, I guess, later, or there's like so many YouTube videos out there already giving
So
you the
I
tutorial.
I think we will cover those things at one
Okay.
point. What I realized was that there are a lot of different people with who want to know different things about crypto. They're all at
Yeah, good.
different stage in their crypto journey, and and we're just talking about our friends and family at this stage, and so I think what we're gonna do with our chats is once a week we're at this time we'll get together, we'll talk about what's been going on, kind of
Yeah.
whatever we're interested in, answer some of the questions that we feel appropriate for these coffee times, and then throughout the week I'll probably try to put out some tutorial videos, some
Yeah.
targeted for the beginner, and then hopefully we'll have different
Yeah, I think so
interest
too, because
levels.
you have the people out there that are like me. I learn by doing
Yeah.
and crash and burning.
Yeah, it's
For
it's
lack
hard
of a
to
better
cover
term.
everything together because there are going to be people
Yeah.
who want to know about the latest DeFi project, and they don't want to know how
Yes.
they don't want to know how to buy Bitcoin, right? So um, we got to keep it a little bit more balanced in these shows.
Okay. So we do have a question asking like to talk about crypto crime and risk, and I think that's a whole big discussion as well.
But we did touch a little
Uh,
bit about on that
a little bit.
when we talked about how to pick a project,
Yeah.
that to look into. Crypto crime. You know, every once in a while you hear about like the next largest hack, and
Yeah.
some hackers stole this amount of money on the
Yeah.
blockchain. But you know what's interesting about blockchain is uh, because it's not always as decentralized as people would like it to be.
Or what
It's
it
it's
claims to be.
it's often not as easy as it seems to move some money around, because you might be able to find a vulnerability with a protocol, but then you find that there's no liquidity, right, to move your money out. So sometimes you're limited. Like a lot of these projects, actually, if they can exploit a vulnerability, they could steal like a lot of money. But often it's just limited by liquidity.
Yeah.
But they can
Yeah.
also like
True.
a lot of these projects will try to reach out to the hacker, offer them some money to try to get it back, because otherwise, they can still try to work with some of the exchanges to
Yeah.
blacklist some of these coins.
Mm. Okay. No, we get it. And I think I'll ask the last question here for now. It's like, how do we know you're not just shilling crypto for your personal gain?
Okay, so maybe I am. No.
I'm saving the most entertaining one for the last.
Okay, so um, the reason why we're doing these channels is really because I want to uh, I want to build up this community. Hopefully, I can attract some people who have the same uh, point of view as I do. Later on when I share more about my how I see the future of Web3, because I have some projects in mind that I want to, if I had the opportunity to build up a team, one of the things I wanted to do was if the community gets large enough to attract some interest in forming a team to build out some of these projects that I have in mind. So that's really the reason why I am doing this. But the other thing is the way I approach crypto, and this is just me, not for DGen Venven there. Like I look at it as holding enough to reduce the risk from kind of my overall portfolio. Okay, so I'm not really into trading crypto, that kind of thing. I'm more interested in the technology, and I hold as much Bitcoin as I need to diversify my risk. So um, if you watched our first episode, you'll kind of you kind of have an idea of how I got into crypto. But basically, I see a lot of the younger generation not wanting to touch gold, and a lot of the gold bugs not wanting to touch crypto. And for me, I like to balance it out.
Yeah, yeah. Well, for most of I guess, the audience, they're just like me because we're in it to try and get money.
Yeah, so I'm not like a Bitcoin maximalist, not a Bitcoiner.
Yeah,
Like I'm just interested in the technology, and yeah, I think everyone probably should own a little bit of Bitcoin, although not financial advice. This is uh, it's just like uh, one of the coming from the macro and uh, the modern portfolio theory thing is you try to find uncorrelated assets, which
hmm
for your investment time frame you expect to
yeah,
have a positive return. And uh, you know, if you have conviction that Bitcoin will deliver positive returns in the long run, so that's why I have my thesis of it gaining market share on gold. That is the primary driver of the the positive returns in the long run. And it's uncorrelated to a lot of the other macro assets like equities and bonds and gold.
Yeah.
and so that's really, and other currencies.
It's kind of really its own asset class, right? When you put crypto.
Yeah.
And I'm wondering, for the beginner out there, like for those of us that want to step into crypto, how, what percent of the portfolio do you think we should test with? Uh, just so that people can get an idea of maybe how much to get in on it for. Because, like, for example, why am I asking the question is just that, for example, you see how Ethereum, the blockchain, where the gas fees are crazy expensive.
Yeah.
There's definitely a lot of cost tied to investing in crypto. It's like, how much do you think someone has to put in? Maybe you want to give an actual dollar amount, like at least how much do you think it would make sense to get into crypto?
Okay, so there are ways to get into crypto without actually um, owning the digital asset,
Hmm.
directly. There are other considerations, but since you're talking about just dipping your toes in
Yeah,
small amounts of money, it's often, a good idea to look at the ETFs and look
yeah,
at the
ETFs.
closed-end funds, look at the mining companies, things like that, where you probably already have a broker account,
Hmm.
so you can get exposure first whilst you kind of learn more about the space.
Yeah.
So, um, sorry, can you repeat the question
Is
again?
there a
So,
certain well, I was
a
asking
dollar
because
amount,
say
yeah.
if we want to hold the
So because,
actual
like, for
coin.
example, if you insist on using Ethereum, right, then you should
Yeah.
kind of check out on EtherScan. You can look at typical uh, costs for each type of transaction. So it's anywhere between like 15 to $40 for your typical transaction, and then
Ooh,
sometimes when it's congested, it could go to like 100 $200. It can be,
yikes.
I've seen it go that crazy. So um, you have to kind of weigh that up. Like for me, it doesn't make much sense unless you're doing like really really large transaction. And even in when you are doing really large transactions, it's probably still um, a good idea to check out the layer twos that we talked about,
Okay.
and other
So delay.
L1s that would be cheaper. So what like there are other layer one blockchains that are really cheap. So the Phantoms, Avalanche, Solana, all of these have really really low transaction fees, where
Hmm.
you start to not need to think too much about the transaction fees.
Okay. And just because you mentioned them, do you think those three that you just mentioned are would you say in some ways the safer ones to approach for a beginner to that wants to say go into some of these L1s besides besides Ethereum and Bitcoin?
So like what is safe and what is not safe, like depends on all the things that we talked about
Hmm.
when I answered the question on security. So it's not
Yeah.
only about the layer one blockchain. um, I'd say look in for practical purposes, most
Yeah.
people probably don't have to worry too much about how decentralized that blockchain is.
Okay. Yeah.
But those are some of the key differences. Like the whole
Okay.
idea of DeFi is that it is supposed to be decentralized. So
Hmm.
if you end up using a blockchain which is more centralized uh, than it's marketed to be, then you're not really doing anything different from the Web 2.0 kind of thing.
Okay. All right.
So
Cool.
is like are those the safer ones? I'd say like anything that's in the top 10
In DeFi
on
Llama?
market cap, like
Okay.
you can think of those as being safer just because they have a larger market cap, they have the highest TVL, and they're more popular. So at least you're not like going into and getting scammed.
Yeah, so at least like I'm guessing because these ones there's the liquidity there, and therefore getting in and out of it wouldn't be as hard.
Um, that's that's only if you um, like if you want to buy the native token for those
Hmm.
L1s, you don't really need that many of their token because in all these blockchains you need a little bit of their native token in order to pay for transaction fees.
Yeah.
Right. So I typically will keep a little bit to pay for transaction fees. Uh, but I wouldn't view those as an investment. If you were to get into those blockchains as an investment, say to buy the AVAX
Hmm.
token as an investment, there are other considerations. Okay, so I'm not here to recommend anyone
Yeah.
buying any specific token, like without really understanding the tokenomics. Okay, so that's
Okay.
another thing to look out for when evaluating projects is the token economics of the project, like what's the supply, what's the inflation rate,
And is
what's the
that also on?
distribution.
Is that also that can be read on DeFi Llama as well?
It cannot. There are several places to go. So first, if you
Okay.
can find a white paper is kind of like a business plan when it comes
Yeah.
to crypto projects, um, or you can try to uh, like for some things you can see on CoinMarketCap or CoinGecko. They may not always be the most accurate. Um, the best place actually is if you go to the protocol itself, there
Yeah.
should be a docs, like a document section. So
Yeah.
you can go and read the docs, and most of the time there will be a section on tokenomics.
Okay. So there we go. If there's no doc section, that's
That's a
one
big red
red flag
flag.
right
Yeah,
there.
huge.
Okay, so I think that's pretty much it as to the questions that we went to today. Anything you want to, after reading these questions, anything you see as a concern, or something that they're not asking that they really should be asking?
No, I think we covered a lot today, more than I
Okay.
thought we would. I really appreciate that because we didn't really share this stream to
Yeah.
anyone. I think I shared it to one of my best friends and my immediate family. Somehow we got like 40 something views,
Which is
and
kind of weird too, because I only shared it to one friend as well,
because
and in
I
my family.
personally I tried to rewatch it and I couldn't get past the 40-minute mark. So hopefully we're improving in terms of
Yeah,
our
I'm trying to
content.
keep it at the 30 to 40 minute
So
mark.
like one of the feedback that we got was we had some audio problems. Hopefully we
Yeah.
solved that.
Yeah.
Hopefully a lot of things are better. We had like a lot of technical difficulties just before
Oh,
our
just before
our
today.
just prior to the stream, and so it was a good thing that we sorted it out just in time. But yeah, really just to thank everyone who's showing their support, and if you're finding us, please like and subscribe. Never, I always
Oh
hear
yeah.
that. It's kind of weird to be saying it, so I get like it's really encouraging to get that kind of a feedback for the first one, and makes me want to put out more content, and hopefully you guys will keep the feedback coming.
Yeah, and hopefully we'll just keep improving from here on.
Okay, cool.
All right. And that's it for
All right,
today, everybody.
have a good weekend.
Have a great night.